traders noting quite a move in volume terms on the Kenyan bourse and saying that the action we're seeing is broad-based and they see it broadening out even further still. What's your view on current market activity?
Well, I think we have reached a place where we're plateauing, largely because we've seen some significant growth from the beginning of the year through to now. So we expected some profit taking at some point. Perhaps this is it, but also on the other side, the fixed income side, we've seen some interest rates edging upwards, and we're not too sure what to read into that. We don't know if that's a trend or it's just that it's just now normal volatility now that the interest rates have found some sort of floor where they are at. But interest rates now become we're trying to focus on interest rates and seeing how that develops as we go on, so that we can see if the valuations will be able to hold.
Well, a lot of focus for now on earnings reports to gauge the health of the economy at this stage on that broad level. We had National Bank of Kenya out with numbers yesterday. Pre-tax profit, as I mentioned, rising 39%. What's your perspective on those earnings, given that quite a chunk of that came on the back of loans and advances, which rose 44%?
Of course, there was renewed issuing of loans throughout the year. I mean, if you looked at interest rates, they've sort of collapsed from where they were at as at this time last year compared to where they are right now. So banks have had to go and aggressively look for loans. Of course, it helps that the economy is growing and perhaps there's some symbiotic relationship there. But we expected all this throughout the year. I mean, when interest rates trend downwards, you expect loan valuations to move up. You expect increased growth of loan books, and that translates to higher profits.
Not necessarily, though. I mean, as we've had growth coming in, we've got inflation ticking lower as well. It was down to 3.1% in October. And with that, some saying the increasing likelihood that we're going to see further interest rate cuts moving forward. What's your outlook in that regard?
Well, it's difficult to say because on the other side, you've seen again the latest issue for bonds. Interest rates actually went up. If you looked at the 91 and 80 and the 182-day T-bill rates, they've edged up, and as well as the interbank lending rates also gone up. Not so much. At this point, we still can't say it's a trend. There's every likelihood that it will go down further, especially if productivity increases. But again, like I'm saying, we are watching because inflation is a lag variable. And with all the quantitative easing, both locally and abroad, and the shilling depreciating against the dollar, we're still watching things. Yeah. Let's just say.
Well, things have quietened down when it comes to plans regarding privatization for National Bank specifically. Have you heard any new developments on that front? Are plans still on track?
Well, of course, the government would love to have that privatized but before they do that, they must convert the preference shares to ordinary shares, and that the dilution of shares is what is putting everything on hold, because the other major shareholder, NSSF, is concerned on what that will do to its books. So that's the source of the hold-up, the conversion of preference shares to ordinary shares. Once they can settle on that, then they can. The rest
At this stage, Johnson, are you a buyer of National Bank of Kenya?
No, I'm not. Again, simply because of the risk of dilution by conversion of preference shares to ordinary shares. But once they do that, it's a growing bank. On the business side of things, it looks good. We're just concerned on the capital structure, that's all.